Think Canada's new property flipping tax rule only catches homes sold within a year? Think again? Canadian courts have long held that even a longer hold can still be taxed as business income, and I'll show you the case that proves it. Hello, I'm David Rotfleisch, a Canadian tax and business lawyer certified by the Law Society of Ontario as a specialist in taxation. Welcome to the Tax Page Tax channel. In 2023, the federal government introduced the residential property flipping rule. Buy a home and sell it within 12 months and your profit is automatically business income. Fully taxable, with no principal residence exemption, subject only to a short list of life event exceptions like a death, divorce, or job relocation. But that 12-month line is a floor, not a ceiling. Hold a property for 13 months, 18 months, 2 years. The new rule simply doesn't apply. Many taxpayers assume that means they're safe to report the sale as a capital gain. They're not, because of Happy Valley Farms Limited versus Her Majesty the Queen, the leading case courts still use today. It set out a 6-factor test covering your intention, how the property was financed, and how often you've done this before to decide whether a sale is really a business transaction. This is binding case law, developed decades before the new flipping rule existed. Courts call this doctrine adventure or concern in the nature of trade, and they weigh your intention at the time of purchase, how the property was financed, whether it earned any rental income while you held it, and whether you've done this kind of transaction before. Even a secondary intention to resell, a backup plan if your main plan doesn't work out, can be enough, as the Supreme Court of Canada held in Regal Heights Limited versus Minister of National Revenue. Picture this. You buy a pre-construction condo, hold it 18 months without ever renting it out, and sell as soon as it closes. That falls outside the new flipping rule entirely, but the CRA can still reassess that profit as business income under this same doctrine. The lesson? The flipping rule is not your only exposure. If you're selling real estate that wasn't your principal residence, talk to an experienced Canadian tax lawyer before you file, not after the CRA reassesses. Contact one of our Canadian tax lawyers at taxpage.com. We are here to help.